What is going on, everybody? Welcome into a special edition of the Daily Energy News Beat Stand Up here on this gorgeous Friday, May 5th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, bringing you our weekly recap. Man, we had a jam-packed show this week. We pretty much had the entire gamut of stories between JP Morgan buying First Republic, crude oil prices tumbling from $76 all the way down to where we're currently trading about $69. Lots of stuff going on in the EV markets. We've got a great weekly recap. Appreciate the team for putting this together. As always, guys, these stories are available via the world's greatest website, www.energynewsbeat.com. Let's go ahead and get to it, though. Let's tee them up.
Financing the energy transition. Follow the money. We need a plan to provide the lowest kilowatt per hour along the path. The cost of moving the energy sector toward net zero is huge, but new research reveals that companies are increasingly prepared to invest, and funding is increasingly available. Let's find out those sectors, Michael. Coming around the corner. What are energy companies where are energy companies allocating capital? 42% of energy companies are investing in energy transition initiatives. 28% now is in returns to investors and shareholders. It used to be 11%.
Ooh.
Wow. All right. Capital investments in traditional businesses in oil and gas, Michael. This is critical. It used to be 2 years ago, 32%. Now it's down to 20%. And 2 years ago, Michael, you and I had on our show, we could pull the tape. We needed trillions of dollars just to meet the decline curves if demand just remained flat. The IEA, the International Energy Association agency, said just recently, 2 weeks ago, that energy demand will remain constant for a while.
Oops. The International Energy Crime Syndicate, you mean?
Yeah. We'll leave my true thoughts alone on that in the EU. I mean, excuse me, the
IEA,
the UN. Yeah,
the
yeah,
IEACC.
Yeah, the UN. Okay. How will they fund this? How will energy companies finance their energy transition initiatives? Private equity, 40%. Existing balance sheet, or Michael, I'm assuming this would be free cash flow, 32%. Equity capital markets, 29%. Data capital markets, 20%.
Debt capital markets.
Thank you. Thank you. Old Moses, me, friends. Bank loans, 19%. Export credit agency, 40%. Hey, I went to OSU, but that is a lot more than 100%.
I know. I was asking that. I was the same thing. I was like, man, that seems like
is this printing money? I gotta go do some research.
This is how you start inflation.
This has got to be printing money.
I think there's two things, Stu. I think it's clear. I think the bigger shift is this. You mentioned it in the big segment. Where are energy companies allocating capital? Returns to investors and shareholders up from 11 to 28%. In capital investment in traditional businesses, down about the same amount, 32 to 20. So it's just a flip. People are saying, okay, instead of spending all of this money in putting it into the ground, just give it back to me. Because think about it, the track record of oil and gas spending capital from 2012 to 2018 was terrible. And it's still kind of is terrible.
Right.
Drilling's a tough business. You know, actually spending capital and spending it wisely is a tough business. So I'm not surprised that it's flipped. I think this whole 42% investing in the energy transition, are we sure about that? Like, define energy transition. Like, are we talking about like...
I got to find out if it includes nuclear and natural gas now, because Yeah, I mean, if it is this article
EQT's
just
then going green.
so funny article. I was like, okay, if you peel out the coming from the bank balance sheet, that might make a little good, but who knows? Okay, I got to go do some research on that article. Sorry about that. Market rally shakeout may be bullish. May be a bullish signal. JP Morgan eyes First Republic after FDIC takeover. Michael, this concerns me a bunch. The FDIC seen taking over First Republic. Banking giants, including JP Morgan Chase and PNC Financial Services, are looking to buy First Republic following a government seizure. The Wall Street Journal reported Friday night, citing sources. The FDIC asked for initial bids by Sunday. Bloomberg reported on Sunday after, I was going to say gouging, but gauging initial interest. Bank of America is mulling it. Michael, this is systemic of an overall problem. And if the government keeps bailing out banks, it's going to be an issue. What are your thoughts?
Well, this comes back to the issue of these larger banks. I think it's important to note that JP Morgan would need a regulatory waiver to buy First Republic. So they clearly think they're going to get the waiver. If they're all spending, if they're, I mean, they got their whole team working on. I mean, what's kind of funny is JP Morgan does M&A for other companies. Imagine being on the M&A deal team for JP Morgan. That's got to be an interesting deal team. I'd love to hear some stories about that. Not for dealing, but where this is all going to lead is, again, Bank of America is mulling some of the banks buying First Republic. It's much like in the oil and gas business, you're seeing massive consolidation because of just the way the equity and debt markets are structured. It favors big versus small. I think that's what you're going to see happen in the banking industry. You're going to see all of these regional banks get swallowed up by, much larger regional banks, and then those larger regional banks will get swallowed up eventually by JP Morgan, and you'll have 10 to 20 banks throughout the country. And is that a good thing or a bad thing? It's probably on average a bad thing. There may be some good things about it. You don't need to worry about, one of the advantages of having just huge banks is liquidity. You don't have to worry about a run on deposits. The FDIC then can worry about other different things. Now, having all of your deposits in one bank can also lead to massive, we already think Wall Street has too much power and too much control over our lives. Imagine if JP Morgan had all the power. Now, I think the thing to be careful of is, in this case, yes, I actually, if I'm going to put my money anywhere, it's going to be in JP Morgan, mainly based off what Jamie Dimon has said regarding the energy transition and his stance on oil and gas. He was one of the few CEOs that sat up in front of Congress and said, moving and getting off oil and gas would be the road to hell.
I love that quote.
He said that. It's a quote directly from him. Now, what happens when a new CEO takes over and doesn't believe that? What happened? The problem with centralization is you're counting on the people in charge. You may like the people in charge now, but will we like them going forward? So there has to be a balance. We have to figure out a way to ride this ship. But JP Morgan may be the only company that could buy this. So I'll be interested to see what happens. But I think that's what's going to happen. Consolidation among banks, and we'll be generally worse off because of it.
I will give you great feedback, Michael. One small thing, and you kind of said, what do you think about more big banks? It would be easier for the government to control the rollout of the Hamilton project, which is the digital currency, which is the end of financial freedom for the US. So that to me is even more scary on that part. Sorry.
Oh, you're good. The Hamilton project. But no, obviously First Republic, they're in trouble. Their stock's down, it's basically down over 100%. You got huge quarter one deposit outflows. There was an attempt to quasi rescue it, but the FDIC came in and just said, no, we're putting you up for bid right now. Someone will buy it. They won't necessarily have to go into receivership. So I think that'll be convenient for everybody, but we'll see. Wouldn't want to be in a regional bank right now.
Energy better positioned for any kind of recession, analyst says. Michael, I'm seeing this all over the place. Investors are calling and asking, and they're saying things like, what in the world do we do? It's energy, baby. It's all about energy. And Chevron, Exxon post robust Q1 profits despite falling gas. They're still got the profits. And for the ones that are good management, good numbers, like you and I have always said, they're good investments. There's a couple quotes in here that are just fabulous. Roger Reed says, always a tough question to answer for the company or for us. So I think if you look at what's typically made M&A work in this space, it's more often occurred during a time of stress, meaning low commodity prices or other extraneous event that for reasons creates mergers. It doesn't mean it can't happen. We just would be saying watch for those moments as opposed to just waking up one day and seeing everything. What this is saying is last year, the Dow Occidental was number one on the Dow, on their Dow exchange. So when you sit back and take a look, Oxy number one, that's only one investment. You have 50% of the E&P operators in the US are privately held. They're good investments as well, but you have real estate, Michael, coming around the corner. I was watching Maria Bartiromo this morning, and the real estate in San Francisco and New York, I think it was 48% is now vacant of commercial space.
Yep.
There is going to be a lot of commercial people looking to get out. So what you're going to see is a run on minerals. You're going to see a run on things with passive income. Anyway, I'm sorry for rolling on that, but I thought this was incredible.
Yeah, I mean, I think he accurately points out, and I thought, Roger Reed, he's a Wells Fargo analyst, so think what you want about their ability to predict. But I think he poses what I think is the right way to think about an Exxon Mobil from a perspective of M&A, because really what they're talking about is, while all these other things are crashing, where possibly should companies be looking at in terms of energy M&A? Well, when you're looking for an acquisition, are you looking for future drilling sites or more of a decarbonization play, which I think is key? There's two driving forces that are going to keep energy high. Obviously, exactly, commodity prices, and that goes into the future drilling locations, but then also the decarbonization for all the stuff that's going on in the Inflation Reduction Act. Who says there's not an Inflation Reduction Act 2? And all of a sudden, CCUS is thrown in there.
Here's the thing. There's absolutely zero reason to fight the clowns. And, fighting the clown, great, let them do it. Go make some money. And then, punch them in the nose or squeak their nose or squeak the horn later, and just go put your money where you can make money. And it's in natural gas, nuclear, modular nuclear. All you got to do is watch out for yourself. Louisiana is positioned to have opportunity to capitalize on changing global market demand and lead in the future of energy by bringing online new advancements in the industry, such as carbon capture and storage, CCUS, and utilization. I want to throw that in there. Blue and green hydrogen and renewable diesel. Michael, there's about 16 really nice big projects going on in Louisiana. And I respect the leadership because they are doing renewables. They are doing oil and gas. Louisiana is home to the Haynesville formation and lots of natural gas. You've got so much going to the Gulf that they have just a huge amount of good things going on. besides having Tyrus off of Gutfeld there, I mean, Gutfeld's a rock star, and
His ratings are insane. I saw he's the #1 late night host.
oh, absolutely, and I would like to have Gutfeld and Tyrus and Kat on our podcast if they're ever listening. So just want to throw that out.
I'm sure they're listening. I'm sure they're getting their editors on it right away.
Oh, absolutely. But that anyway, hats off to Louisiana. Absolutely a positive article. They've got $18 billion in projects announced for carbon capture, renewable biofuels, blue and green production of hydrogen and ammonia, while they're doing all of the normal oil and gas in the Haynesville. Wonderful way to do it. So
yeah, and they're taking I think the infrastructure and investment in the CCUS really will be the bridge between the old and the new, if this is where things are going regardless. I mean, if scope 1 emissions are going away, CCUS is the quickest way to do that. So I think this is smart overall in terms of a strategic play.
Ford loses nearly $60,000 for every electric vehicle sold. Is that a good business sustainable model?
No, that doesn't add up.
No.
I mean,
I was like, the car maker was on a roll at the time. Let's see here. It was planning on starting a production of the F-150 Lightning, the electric version of the iconic best-selling 150. You and I have already talked about this. Let me get into the losses here. It appears that the Ford Model E recorded a loss before interest and taxes of $700 million. This is $100 million more than fourth quarter of 2022. The margins are also in the red. The EBIT, earnings before interest and taxes, which allows investors to assess the true cost of the activity, is negative 102.1%. And this is more than twice as much as fourth quarter in 2022, in which the EBIT margin was negative 40%. On the revenue side, it amounted to $700 million for the first 3 months of the year. It's less than half of the $1.6 billion in revenue generated by the Ford Model E in the last quarter of 2022. We're seeing some real trends there, Michael. People are not wanting to buy electric.
Yeah, I mean, they specifically mention, one of the third headlines here is gas cars are fine. I mean, they're not necessarily seeing a dip in sales across their non-electric fleet, which I think is interesting and probably feeds into what really the other two stories you've got lined up, which is specifically more and more Americans don't want electric cars, which has been a theme of this earnings season. I mean, remember, we've just gone through 158 companies release their earnings. More are coming on the way. We're being able to dive in and really, in a full year of all of these companies doing EVs, been able to sort of look behind the glass and see a little bit into their balance sheet. It's not good.
No. And Siemens lost $1.7 billion in their wind farm division.
Yeah.
Okay. I think, and this is just my personal opinion on this before I go to the next story, which is related to this story, and that is the infrastructure bill. Actually, I think has caused part of the problem, Michael, from the standpoint that the Biden administration goes, okay, look, tax credits. No, tax credits. No, you get no tax credits for you. I mean, they're just like, they're
the infrastructure bill or the Inflation Reduction Act?
Both of them are porculous, but it was
because I was going to say there was the porculus bill was before the Inflation Reduction Act.
The Inflation Reduction Act had the big tax savings in the car,
and wasn't the porculus bill is what it was? It's dubbed now, but wasn't it called like Build Back Better? Or something?
Yeah,
like there was some weird phrase.
You just can't buy this kind of entertainment. Next story here, man. More and more Americans don't want electric cars. Battery powered cars seem like the next best thing, but growing Americans aren't ready to give up internal combustions. We live in too big of an area, Michael. I travel from state to state. Top line metrics on overall EV market share, availability, affordability have been on a long-term upward trend. The market research firm said, but beneath those headline numbers, we are starting to see some consumer behaviors that suggest a possible bifurcation of the automotive marketplace. Let me put it to you this way. California people are going to be able to have transportation in everywhere but California and New York. If you want to live and own a car, you can be anywhere in the US except in those cities or even Chicago. I mean, that's just the way that they're planning on doing it, Michael.
Yeah. I think there's a few hurdles specifically on like the user acceptance side that I think this article points out. One, respondents in this, survey were very concerned about their performance in extreme temperatures. I think that's the first thing. Like, and no one in Colorado people in Colorado. Yes, they have a Tesla, but they're not taking it to the mountains.
No, and that's their second car.
Yes, exactly. It's EVs are people's second car. When the discussion shifts from second car to primary car, you might have me. But that's a long way away. This is an interesting thing. Obviously, the majority of boomers and pre-boomers aren't considering EVs. That's clear by these stats. This is interesting. 33% of Gen Z told this survey that they were either somewhat unlikely or very unlikely.
Oh,
that's not an insignificant portion of the population,
no.
And Gen Z, no less.
I was surprised by that number, but I'll tell you what. I mean, you sit back and take a look at me. Why? Because I can buy a $15,000 used car and be just as happy. And think about the difference between that. That buys a lot of gas. $80,000 buys a lot of gasoline.
Yeah. I mean, me and you have talked about this. It would be fun to get corporate podcast Teslas, but that's a second vehicle. That goes back to your original comment. It's a second vehicle in most applications. There are very few applications, in my opinion, unless you live in like a dry climate, like Southern California, and you don't necessarily have a long commute, is going to probably be, you could be your primary car. But for the vast majority of Americans, it can't happen. As always, guys, we appreciate you tuning in and sticking with us each and every week. You guys are definitely the backbone of this show. For Stuart Turley and Michael Tanner, guys, we will see you Monday. Stay strong this weekend.